here with everybody today to talk about Nacha's approach to risk management and how we are handling that through both rulemaking and outreach to the industry through events such like this. A little bit of level setting, as Praneep said, the ACH network is thriving. When we talk about the modern ACH network, it's important to understand that the transactions don't actually run through Nacha. We have two system operators, the Federal Reserve and the Clearinghouse, and approximately 10,000 endpoints. So almost every financial institution in the United States and then some. Right now, we're averaging about 120 million payments per day flowing through the ACH network, and those settle up to 4 times per day. And that is our overnight window, as well as the 3 opportunities each day that we have for same-day ACH settlement. So as you see at the last bullet, we have the ability to handle same-day payments, both debits and credits, one-day payments, debits and credits as well as credits that can be entered into the network up to 2 days in advance. So a lot of flexibility in the modern ACH network to be able to handle that high volume of payments that we were just talking about. I'm also going to do some level setting here and talking about the different players in the ACH network. So oftentimes when you hear about the activities at Nacha, you hear about rulemaking or risk mitigation through the ACH network, there can be some terms that are thrown around. We have alphabet soup. We like a lot of acronyms. So I wanted to go over quickly the actual types and roles of the participants in the ACH network. As you see on the picture of the slide here, the flow of information is always going to be the same, whether it's a debit or a credit payment. The authorization has to come from the receiver. That is the account holder whose account is going to be impacted, either debited or credited. They will provide an authorization in whatever form is required to what we call the originator, who creates the payment. They send it through the ODFI, their financial institution, flows through one of those two ACH operators that I just mentioned, onto the RDFI, and then ultimately, as I started with the receiver, their account is impacted. So again, this flow does not change whether it is a debit or a credit transaction. The only thing that changes there is the flow of the funds. So in a little bit more detail, who is an originator? An originator is that party which initiates the ACH payment. So again, because we have both debits and credits in the network, we need to think about this in terms of who is creating the actual payment that is going to go into the network, not necessarily who's credited or debited. The originator can be a company, an organization. It can be a government agency. The federal government is actually the largest single user of the ACH network, and then followed on by, the state and local governments as well. And a consumer actually can be an originator as well. They must have authorization from the receiver. That can be in many different types of formats. For example, a credit still needs to be authorized. However, a credit to a consumer could be authorized verbally. Whereas a debit transaction, if it is taking place over the internet, may have specific requirements as to what that authorization needs to look like. But that originator must have an authorization from the receiver. The only exception there is where we call out P2P payments. And that's because, excuse me, the consumer is the originator, and we do not have the same types of requirements on a consumer originator as we do an organization that is creating a payment. Some of those organizations I mentioned: government, schools, colleges, charities, utilities. I'm sure a lot of people are used to, paying their electric bill, things like that, through a direct payment, and that's flowing through the ACH network. The originator has to submit the transaction through a financial institution. An organization is not going to have direct access 99% of the time. They're not going to have direct access into the actual network. So they must submit a file through their financial institution, which we call the ODFI, Originating Depository Financial Institution. I will mention there can be third parties that can sit in between these steps that we're talking about today, but these are the basic parties within a transaction. So that ODFI is the party, again, that's going to put that transaction into the ACH network, and they are the party who is warranting each transaction that they submit into the network, and that it is correct, it is authorized, and that they have all of the necessary agreements, both between them and their originator, and that the originator has an agreement with them to be doing business, and everybody agrees that they're going to abide by the Nacha operating rules. Again, as I mentioned before, the exclusion there is for consumers. We don't make them abide by the same stringent requirements. The middle piece here, the switch, if you will, is the ACH operator. So they are the central clearing facility. They're going to be taking in the files from the ODFIs. These are batch files. Remember, ACH is a batch network. So they are going to then unbatch those transactions, determine where they need to go, where they're supposed to be received, and then they are going to create the outgoing files to send to those receiving financial institutions. As I said, there is the Federal Reserve as well as the clearinghouse, two different operators. Both can be involved in a payment. One can be involved in a payment. It just depends on who is providing the service to that financial institution. The operator is actually the party that is performing settlement, which is the movement of the money between the financial institutions. So once they've created those outgoing files, then they will start creating the settlement entries, and the accounts, the Federal Reserve accounts of those financial institutions will be adjusted based on those transactions that were processed within that processing window. The files are then sent off to the receiving depository financial institution, or the RDFI. They're the financial institution that holds the account of the receiver. So they're going to receive the file, and then they're going to do everything they can to post those transactions. They have requirements of when they have to do that. So for credits, there are funds availability requirements that they must abide by. And for debits, there are no sooner than requirements that they must abide by. There is the capability for an RDFI to return a transaction if they are not able to post it, but there are specific timeframes within the Nacha operating rules that they must abide by in order to do so. And then finally, again, we have that receiver. So the receiver is the party whose account is going to be impacted. They are also the ones who have provided the authorization. So if I'm paying my electric bill, Amy is the receiver. I'm going to give my authorization to the electric company. The electric company is going to send the file to their financial institution, the ODFI. It'll go through the operator. It'll come to Amy's financial institution as the RDFI, and then ultimately that RDFI is going to post that debit to my account. So once again, that receiver can be an individual, it can be an organization, and it can also be a government agency, same as on the origination side. So now that we've covered who those parties are, I want to just quickly touch on sort of the contractual hierarchy, because oftentimes we get questions about rule enforcement. I mentioned the ODFI is the party who is warranting the correctness of the transaction, the information that it is authorized properly, etc. So they are the parties who are signing agreements with those operators. And baked into those operator agreements are their obligations and their agreements to abide by the Nacha operating rules and provide these warranties and indemnifications. Originators, and as I mentioned before, there can be different kinds of third parties who may sit in between and help that process. But third parties and originators are going to have contracts with the ODFIs, the financial institutions. So if something goes wrong, if Nacha receives notice of a potential rules violation from another party in the network, Nacha is going to go to the financial institution, the ODFI, and that is where our enforcement process lies. There are rules that require originators and third parties to perform certain activities, but it is the ODFI that is warranting that they are doing so. So if you are not a financial institution and you have questions about enforcement, penalties, things of that nature, you need to be speaking to your ODFIs, because any action that would be passed on to you from Nacha is going to be as a result of that ACH origination contract that you've signed with your ODFI. Nacha has been very risk focused over the last several years. And so many of the rules that we have passed have been risk focused. And so I'll call out a couple of those that may be of interest, but you can find all of the details related to all of the rules as they pass out on our website under the rules section. We had the account validation for web debits, also known as supplementing fraud detection for web debits, which, as I said, is affectionately known as the account validation rule. And this is a requirement for online payments that can be through a browser, mobile, text, different kinds of devices, anything that's over an online channel. If it's the first time that a consumer account is being used, that account number must be validated. So that rule took effect last year, 2021. It began enforcement in March of this year. And so hopefully this is something, that folks are very aware of. And if not, you are underway if this rule applies to you. The next one that's coming up is around micro entries. Micro entries, or penny tests or test transactions, are not new, but they are becoming more widespread, particularly because of the account validation requirement. This is one way to validate an account number, and in theory, that somebody has access to it. So these new rules that are being phased in are going to basically standardize the micro entry process. Again, not a new type of transaction, they just were never defined under the Nacha operating rules previously. And so phase one defines them as a transaction type and indicates the formatting that needs to be used. And then phase two in March of next year requires that originators of micro entries employ commercially reasonable fraud detection, so they can make sure that their systems are not being abused by fraudsters. So those rules, where do they come from? It is a living document. We have a rules and operations committee who votes on our rules, and then we move through a proposal, and it is a public process. And again, every year we are publishing a new, I call it a book, but it is also of a digital variety. And throughout the year, we are making changes. And so it's important to sign up for things like Nacha's Rule News so that you are aware of these changes that can be happening throughout the year. I also wanted to call out a great resource that we have out on our website, which is a guide. It's called Protecting Against Cyber Fraud, but really you don't even need the word cyber there, because these different types of attacks can happen through any channel. This is recently updated at the end of last year, and again is found out on our website, covers all the types of frauds that you see over on the left-hand side: business email, vendor, payroll, and talks about what it is, as well as how to avoid falling prey to these scams, both for financial institutions as well as information to provide to your customers. some real world examples here of how we have seen these things happen. Vendor impersonation. We've seen we've seen many more, but two specific examples of county school systems that actually were right next door to each other, where a vendor was able to, excuse me, a fraudster was able to see the vendor contracts because a public school system is being a government entity, their contracts are for the public record. And so the vendor poses, excuse me, the fraudster poses as the vendor and contacts the school system and says, hey, my banking information has changed, so redirect my payments in the future to this new account number. The county would make the change. So now we've severed the tie between the true vendor and the county. And now the fraudster is just going to sit there and wait until the next invoice is scheduled to be paid. And the money is going to go to the fraudster, and the true vendor is never going to see those funds. And so again, we've got lots of tips on how to try to avoid falling prey for, again, the originators, third parties, as well as those financial institutions in our booklet online. And then finally, the last example I wanted to mention is that it is very important that when you have third parties involved, that there is due diligence still happening for the third party customers. We have new rules that talk about this concept of a nested third party, which means a third party that is going through another third party, and this can happen level after level. We had a couple of years ago an incident where payroll situation was going through nested third parties, and unfortunately somebody was able to alter the actual file, not the ACH file, but the file that was being sent between the companies, to change where the funding for the payroll was supposed to go. And he put it to his personal account instead of the offset for all of the payroll transactions. This was not caught in time, and all of those payroll transactions went out to the tune of, tens of millions of dollars without ever being funded. And this was as a result of a lack of due diligence and understanding all of the parties that were within the chain, as well as having appropriate controls to ensure that things were not being changed within the information. The last thing I will mention is this is not included in the fraud guide, but the example was a mass redirection, but there's also issues of individual payroll redirection where somebody poses as an employee and changes the account number. Nacha has created an optional standard that will allow for easy identification of payroll transactions, including ones that are being sent for the very first time, that will help with risk mitigation and identifying those types of transactions the first time they come through, so that we can make sure, hey, yeah, this is the account that it's really supposed to go to. So lots and lots of things happening on the Nacha side focused on risk. I would thank you so much for allowing me to be here with Modern Treasury and Settle and all of you today. And I'll turn it back over to Pranav to move us on to our next section.
Thank you, Amy, for that comprehensive overview. Looking forward to diving into it a little bit deeper in our Q&A panel discussion at the end of the presentations. But next up, I'd like to introduce Eric, who's a product manager for compliance at Modern Treasury. Modern Treasury is a third-party service provider in Nacha parlance, so we make it really easy for companies to originate and receive ACH payments. And so having appropriate controls for fraud and risk is really top of mind for us here. And so I'm going to hand it off to him to walk you through our approach to managing fraud and risk and some of the products that we've built. Over to you, Eric.
Thanks, Pranav. So I'm going to give a presentation in three parts. First, I'll give a little bit of an overview of Modern Treasury and what do we do. Next, I'm going to talk about why are we building products in the compliance and fraud space. And lastly, I'll tell you about what we've built and how it helps reduce fraud and help companies stay compliant and also kind of adhere to Nacha's rules. So starting off with Modern Treasury, what do we do? Modern Treasury builds software for high volume payment flows. At a very high level, you can connect your bank accounts With Modern Treasury, you can then move money over different payment rails, ACH, wire, RTP, using modern APIs kind of built for developers. You can reconcile payments automatically and instantly, and also have a single source of truth for bank accounts, balances, and transactions. And overall, we can move money quickly, even faster than third-party senders, because we don't actually sit in the flow of funds. This is very important. It's just an API that you can use to make payments and kind of connect your bank accounts here. And overall, I'd say we serve two different users mainly. So there's developers and also finance and operations teams. For developers, I think of Modern Treasury as a way to programmatically move money around. You can automate complex payment flows using very modern REST APIs and developer tools. No longer you have to go to some web console somewhere and manually be paying people money. You can do this programmatically. You can also, with Modern Treasury, it's a unified interface to connect to different bank accounts. We've also built out other tools that help move money, such as ledgers and virtual accounts. For payment operations teams, we've built tools that help save a lot of manual effort and time and centralize some of these workflows. So we see a lot of customers building out huge teams to understand where are payments coming from, who is paid, who hasn't paid. Modern Treasury, you can automate a lot of that reconciliation process that happen every month, every quarter. We've also built out different tools to help with things like payment approvals. And overall, we see users going into our web app and kind of as a central hub for understanding the entire payments life cycle and all the different payments going on. Modern Treasury is very industry and use case agnostic. We have customers across a wide range of industries, marketplaces, fintech, investing, bill pay, crypto, insurance, lending. The list goes on and on. Anyone who moves money is someone who I think can be a customer. We've been reconciling over $2 billion in payment volume each month, and kind of that's been rapidly increasing. So that's a little bit about Modern Treasury. Next, I'm going to start to talk about why do we build compliance and fraud products. I think of three main reasons. First is customer pain. When I go and talk to our hundreds of customers, I heard a lot of customers struggling with these topics. Fraud can happen at almost all companies that move money. Many companies that we work with are small and fast growing and are often underprepared, are victims of their own success and haven't set up robust programs for fraud and compliance, and all of a sudden are facing attacks. We also see that it's a necessity. It's not really a nice to have, it's a must have for companies. Companies are subject to Bank Secrecy Act regulations that try to prevent money laundering and terrorism financing. And overall, we see companies kind of slow to set up tools in this space. They're trying to evaluate and integrate different vendors, but it's really hard. It's no one's core competency to do this generally, especially younger companies. And so it often takes kind of time and effort and resources away from kind of their principal activities of building products and going to market. Second, we think that this area is better managed by experts. Fraudsters are always changing tactics. It's the fun cat and mouse game. One of the reasons I enjoy actually working in this space. Additionally, the compliance landscape really varies by state and country. And so when you think about having to build tools and manage compliance and fraud, it's really complex and time consuming. There's also a lot of benefits to doing them at scale when you can see data across many customers. Third, I saw a lack of fully integrated solutions. And when I talked to customers, I heard them saying, oh, I'm stitching together 2, 3, 4, even 10 different systems and data sources for compliance, fraud, and payment operations. It really blew my mind. And I heard customers saying it takes a significant amount of time to integrate and manage these tools. And there's many different layers you can go to, all the way down to ground truth data providers, to purchasing vendors that integrate some of those data providers and provide a one-stop shop for KYC or transaction monitoring. But even then, we see customers stitching together multiple of these tools and also figuring out how to integrate that with their payment operations. And so I saw a big opportunity to create our product in this space. And so what do we build? Next handful of slides to discuss some of the areas that we've worked on. A couple of things that we've built, or one, to help with account validation. And you can do this a couple ways with Modern Treasury. You can do so with micro deposits, as well as instant verification with Plaid. This is super helpful for companies trying to adhere to Nacha's guidelines. So first off, micro deposits. With Modern Treasury, you can quickly and easily send a couple of payments to an account, and then the counterparty can then return those payments to verify themselves. A nice thing about micro deposits, they work with any bank account, but kind of a downside, they take a couple of days to go through this process. Modern Treasury customers can also take advantage of instant verification with Plaid. That's where our customer's customer can pass through their bank account information, and then with Plaid kind of do the account validation and kind of confirm the ownership, as well as like the account is open. It's a really nice user experience using Plaid, but on the downside, not all bank accounts actually support Plaid, and some users can actually be reluctant to grant access to bank accounts. But overall, both of these methods for account validation are super helpful, and it's something that you see lots of customers using and are very happy with to help. Next, I want to go into more detail about our new compliance and fraud product that we launched almost maybe coming up on a month ago now, and I think about it in a few different pieces. So one, we built out an embeddable onboarding flow. This makes it really easy for kind of our customers to collect information about their customers and then move money to them, all without storing any personally identifiable information. And this embeddable onboarding flow is super easy to embed for developers. It's just a few lines of JavaScript that you have to put into your application. You can get up and running. Second, we built out some KYC identity verification. And so once that user has entered in their information, we're conducting a wide variety of checks on that user, which are super helpful for recognizing fraudulent actors and also identifying potential compliance issues. Third, we've built out transaction monitoring, which is really easy to enable. You can do so just kind of with a single line of code change that guarantees that all transactions are tracked for fraud and money laundering risk, any payment order that happens with Modern Treasury. And lastly, we built out some case management tools that help streamline this manual review process and provide an audit trail for oversight. And overall, we're really centralizing both kind of compliance, fraud, and payment operations all into the same platform here. That's what's so powerful and really differentiated about our approach. Going deeper into these various areas, starting with that user onboarding, when you think about fraud, oftentimes they're using stolen or synthetic identities and trying to gain access to an account or open up a new account. And so we have a variety of checks in place that help detect this behavior. So starting with database validations, once the user enters their information, we're checking it against a variety of ground truth databases, I think from telecom companies, DMVs, Social Security Administration, et cetera, and looking to see if that information matches other records. And these checks are really helpful to see if this person has maybe generated a new synthetic identity or possibly stolen identity, but doesn't have all the details quite right. Second, we built out some pretty advanced behavior and device intelligence. And how about this looking at how's the user engaging with that onboarding form? They copying and pasting their names, for example. This is something that we see fraudsters doing, but a typical user, you typically type out your own name because you know it by heart, versus maybe a bank account, you might copy and paste information because you actually don't know it. We can also look at device information. So that's looking at browsers and user agents and IP addresses. For example, we can see if an IP address looks like a VPN. That's usually a small predictor for fraud. It's many of these signals together that we're using, by the way. Thirdly, phone data. What can we look at from phone records? For example, here, if we can determine it's a VoIP number, or maybe there's limited activity going on with that phone number, or activity going on from high-risk countries, these are all potential indicators of fraud. We also perform sanctions and adverse media checks. It's a little bit more helpful for the compliance side of things, for anti-money laundering and Bank Secrecy Act compliance. We're checked to see if that user is on any government watch list, such as OFAC, SDN, PEP, just to help find any potential compliance violations. Fifth, email validation. What can we glean from the email domain and email address that's being used? We commonly see new domains being used by fraudsters. They'll spin up a domain. Maybe it's similar to another one, but with a little bit of a typo. And then to Amy's example, pretending to be a vendor. These are things that we can catch by looking at email data. And lastly, the sixth thing, bank history. What can we learn from bank account records? For example, if we see that bank account has maybe a history of returns or OFAC warnings, these are all potential signs of fraud. Next, with transaction monitoring, I want to talk a little bit about our approach to all this, but overall with transaction monitoring, you can monitor any payment that goes on with Modern Treasury with the flick of a switch. We're looking for evidence of fraud and money laundering. And the approach for this, as well as for the user onboarding and KYC checks, is a combination of machine learning and rules. So machine learning, we're looking at data across many customers and training models to look for fraud and AML risk. We also have a rule engine here in the background. So there's out-of-the-box rules that you can use to kind of catch common patterns, but it's also really easy to create new ones. In transaction monitoring, for example, you might be looking for new accounts with higher than usual transaction volumes, or maybe a dormant account that's now being active. And our solution really helps with automation. Any high risk transactions are automatically flagged and declined. Low risk ones are automatically approved. This can help improve operational efficiency so that our customers are spending less time in the portal reviewing transactions or user onboardings. Lastly, on the security and privacy front, this is incredibly important to us at Modern Treasury, how we can handle PII safely. For customers, you can move money without storing any PII. If you use our embeddable onboarding form, you can collect bank account details and create counterparties, move money to those users, all without storing any PII on your own servers, which is a huge benefit. And on the Modern Treasury side, a few things that we do to keep data safe. We have role-based access control, so only certain of your users can have permissions to compliance-related features. We also encrypt PII and use a key management system as well. And so overall, I'm super excited that we've built some of these products to help our customers with one platform do compliance, fraud, and payment operations. And they can get to market faster. without all the heavy lifting typically required.